Toronto TSX Venture and London AIM-listed Thor Explorations is a West African-focused gold producer. Its flagship project is in Nigeria, where the Segilola mine is expected to produce between 85 and 90,000 ounces of gold this year. And there's recently been some exciting developments as well at the gold project in Senegal, the Douta Project, where there's been a more than doubling of the company's contained gold at the site. Let's get some more details now on this exciting company. And we're talking now to the chief executive, Segun Lawson. Segun, look, it's a great story. Tell us some more about what's happening, because you've seen some great news recently on your exploration business. But I want to talk as well about this flagship production, because obviously that's where the income is coming from. What do you want to flag as the most important bit of news you want to talk about? Because there's lots of strands going on here.
Yes, I think, well, first of all, thanks for having me on. I think first and foremost, we have to set the background as to where we've come from and why we're very optimistic about the near-term future. You know, we transitioned from an explorer, developer into producer. Last year was our first calendar year as a producer. We produced just over 98,000 ounces of gold. So it was an excellent success for our first calendar year. And, you know, this year we're looking to continue that. Like you said earlier in your introduction, 85 to 95,000 ounces this year. We hope to be at the top end of guidance there. And, you know, this year has a higher strip ratio. We're moving more material than last year, hence the lower ounces. But, you know, after we get through this year and from the second half of this year, the strong cash flow starts building up very nicely. One of the key milestones we achieved last year was paying down half of our senior debt. The balance of that senior debt scheduled to be paid down and restated to be paid down over the next 3 years. So we're very encouraged and optimistic by the next couple of years should we continue to achieve our targets. In parallel to that, we are a first mover in Nigeria. We've got exploration going on there. And as you mentioned as well, our Dutor Project in Senegal is an excellent growth project in our portfolio, where we aim to build our second mine organically there. We've just updated the mineral resource, and we've kicked off a 40,000 meter drill program there.
Just picking up on the point you mentioned about gold production, with that estimated figure this year, it's less than last year, but I know the intention is to go more towards back up to the 100,000 a year level. What's stalling, not stalling, but what's putting the brake on this year with production?
Yes, that's right. And it's just a case of the geology. The ore body is plunging as we go deeper to the south. So we do have to get rid of the waste that sits on top of the ore body as we go to the south. But like I say, once that waste is out of the way over the next 5 months, we're actually living in some high-grade material for the rest of the mine life. So it's all about getting the next 3 to 5 months right in terms of stripping away this waste. And once that's done, you know, we start building up cash nicely. We get rid of the debt. And, you know, we're generating, at today's gold prices, we're generating very strong cash flows, north of $100 million free cash per year thereafter.
So what about the all-in sustaining costs in getting this stuff out of the ground? With this, as I say, the break on the numbers this year, is that pushing the cost up considerably, or what are you looking at per ounce?
Yeah, so for the remainder of the mine life, the all-in sustaining cost is around about that $800 mark. Last year was just over $9. We had a guidance between $850 and $950. We expect to come in slightly above that. However, you know, we do think that this year is going to be slightly higher. We put a guidance of about 1,150 for the all-in sustaining cost for this year, and that's really because of the higher strip ratio we have to go through this year. The key components that go into that are diesel for the trucks that move all this material, and explosives. Both have seen a global rise in prices, but you know, once we've got this waste material out of the way, it then becomes a lot lower cost for the remainder of the mine life.
Yeah, and of course that brings a lot of cash onto the balance sheet, as you said. Very cash generative business. What's going on in Nigeria at the moment, and of course, presumably, I imagine that is what is funding the Douta project and your move there. Just explain more about where you are with that and what is still to come in terms of the cost before you even begin to start building a mine.
Sure. So the Dutor project has always been our second project. We've always had very good ambitions there, and we've always had the feeling that this was going to be end up being larger than Segilola in Nigeria, albeit at a lower grade. Ounce for ounce, it's certainly bigger. It's a project we've progressed over the years. Our maiden resource was in late 2021, and we were happy with our maiden number, 730,000 ounces, grading at 1.5 grams per ton. We've updated our resource after a 26,000 meter drill program last year. That's now sitting at just under 1.8 million ounces. And now we've kicked off a 40,000 meter drill program there. So we expect and we hope to be slightly above that 2 million ounce mark. We're focusing this drilling on some higher grade areas. And we're focusing this drilling on not just the resource numbers, but also looking at things like the geotech drilling, the MET drilling, so we can start doing our engineering designs and fast track this project through to construction and production. Back of the envelope, it's hard to say just yet how much it's going to cost, but ballpark figure would be somewhere between 150 to $200 million. Now, we hope, given that we're generating strong cash flows out of Nigeria, we can have a more corporate style facility than a project finance facility, where we can increase the leverage at a corporate level to fund the construction of this project. And that's something we will look at later on this year.
Compare and contrast the differences of operating in Senegal to Nigeria. Clearly, you've got the mine up and running nicely in Nigeria, and I'm sure that you've got obviously good relations with the government there. What about Senegal, and how does that differ in terms of the relationship with the authorities between Senegal and Nigeria?
Obviously, being a first of its kind project in Nigeria has almost made us a poster child, and we were able to lean on the Ministry of Mines there for guidance and for help. It was a bit of a learning curve for us. It was also a bit of a learning curve for them, but they provided all the support required to deliver this mine through a very challenging global COVID pandemic. In Senegal, I guess the advantage there is that there have been large-scale mines built there before. You have the Sabodala mine, you have the Mako mine as well. You have a number of big players who are already there doing advanced exploration. So the Ministry of Mines is very well averse to what it takes to build a mine. We've been in and out of the Ministry of Mines over the last 18 months, letting them know of our aggressive programs and our intention to fast track and build a mine, and they've shown the support that that we've required and requested, and they've also demonstrated the fact that they're willing to support us through there as well. So we'll continue that process there. We believe having the recent experience of doing it in Nigeria with a mine building team that's still in-house in the company, with an EPC contractor that's still on board and still friends with us, should I say, after building this challenging mine in Nigeria, we believe we're well positioned to deliver a second mine.
Yeah. When you're building a mine, of course, you have to keep your eye on what's going on with the local environment. The ESG side of the business, that's really ticked up in the last 4 or 5 years or so. And of course, now having obviously got the mine, as I say, up and running in Nigeria, what about the ESG side of things? Is it costing a lot of money to keep on top of things? So you're talking there about one of your big costs is diesel. I mean, I guess there's some encouragement to try and steer you away from using fossil fuels to drive a mine.
ESG is certainly very topical at the moment, and it's something we are prioritizing internally. So even using the diesel as an example, our trucks and excavators run on diesel. However, our power, we transitioned in May last year from diesel to compressed natural gas, which has a much lower greenhouse emissions component there. We are constantly carrying out activities in the ESG sector like I say, to prioritize this. And, it's even more important to us, given that we are in Nigeria, where there is a legacy in the oil and gas sector of poor ESG on the environmental side and the social side. So it's something we've prioritized. We carry out a number of projects which are increased with our cash flow generation, right from giving scholarships to primary school students to community projects as market gardens, fish farms, cooperatives we do with the community, hiring locally, procuring locally, and also having internal targets to increase the female component in the workforce locally. So it's something we take very seriously. We have all our policies on our website. We have a sustainability report going up on our website as well, and we continue to aim to be fully transparent with this.
Let me bring up a share price chart, if I can, of the London listed stock. I think got a share price which represents about 170 million pounds worth of market capitalization, I believe, at current prices. What do you tell investors when looking at this? What are you, 17 pence a share at the moment? What do you tell investors about what they're buying into, what it represents in terms of the overall value of the company, and what gold you've got in the ground, and the mine life and so forth? How much of a discount is there between where we are and where you think the share price should be?
Yeah, first of all, I would say that's $170 million Canadian, probably
Right,
110 million pounds. So if you put this into context with our projected free cash flow, today's gold price, where we're expecting free cash of around about $100 million per year, or we're generating that already, and which starts building up nicely from the second half of this year. I would say we're extremely discounted. And I think the key reason for that discount is people are expecting to see if we can extend the mine life. You'd have seen in our press release earlier this month, we've made a new discovery just 15 kilometers away from the mine. That's our first that's our first discovery outside the mine footprint, within trucking distance. These ounces are what I would like to call super ounces. There's no infrastructure requirement, no significant capex requirement. These are ounces that goes directly to the bottom line. So, 100,000 ounces here is literally $100 million. One of our intersections there was 3 meters wide at 227 grams per ton, which included a meter at 310 grams per ton. This is extremely high grade material. We're currently fleshing that drill program out and trying to get a maiden resource there this year. That completely takes the NPV to a different level, and it's something we're hoping to build upon. Now, if you put Nigeria aside and you just look at Senegal on its own, where we're looking at just under 2 million ounces as we stand, that project on its own would have a significant NPV to our market capitalization. What we're trying to do in Senegal now is complete a preliminary feasibility study before the end of this year, and that will give the market a first opportunity to look at some economic commercial numbers on an NPV basis for that project. So I think there's significant value to be delivered to the market. We're not conceptualizing anything at the moment. It's not a theory. We're generating real cash. We're producing gold every week and exporting it. We've paid down half our debt. Our forecasts are done on $1,800. But today's gold price, that puts a further premium on. And I think, a lot of our discount has been the fact that we have been under the radar to a lot of investors. As we continue to get the story out and educate people as to what we're doing, I think a re-rating is almost inevitable.
Yeah, look, it's an interesting story. We'll have to leave it there, but thanks indeed for joining us. It's interesting to catch up with you. Segun Lawson, Chief Executive of Thor Explorations, the London and Toronto listed gold production company.